What's going on, everybody? Michael Silva here. Today's episode is titled Brace for Impact, because we got ourselves some big stuff coming out this week. And in today's video of the Stock Market Brief Show, we're going to give you updates on the weekly expected moves, daily expected moves, going to look into monthly charts and give you some signal charts, talk about a couple commodities there too as well. So what do I mean by brace for impact? Well, we do have on Friday, still got some breathing room till then, we have Fed Chair Powell coming out and talking at the Jackson Hole Symposium. We also have NVDA reporting after the close. And if you're watching the market today, taking a look at that heat map, NVIDIA was up a whopping 8.41% on the day. Tesla not too far behind, 7.29%. So is the market getting some relief from this recent sell-off? Well, if we take a look here, Dow Jones ended up slightly down on the day. The NASDAQ composite was up 1.56, and the NASDAQ 100 was the leader here, up 1.65% on the day. As far as the 11 sectors go, we still had actually more than half in the red. However, we noticed at the bottom we have more safety type trades going on, where at the top, XLY and XLK, more of a risk-on type day. Now, if we take a look at the SPY on the 15-minute time frame, you may or may not remember this chart. We have the 5-day moving average, which on the 15-minute chart is the 130-period simple moving average. And we talk about this 4 stages that markets go through, or individual stocks can go through too as well. And that's stage 1, accumulation, the markup phase, a distribution phase. Stage 3 is the decline, stage 4. And what we look at here is this purple moving average, because it helps us identify when we might be going into a markup phase, if it starts turning back up again, and it tells us when to watch out in a decline phase. So as it stands right here, we were in a markup phase as price was starting to go sideways, and you can see it was starting to get tested multiple times, came down, got back up, but then all of a sudden on this break, we started to see it decline, and you can see it held as resistance, 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 and today we came back, we tagged it, which was also in confluence with a daily expected move, the upper level, almost to the T. That's why we watch these levels and why I find them to be so important, especially when they come in areas of confluence. So not only was the 5-day moving average moving down, but we also tagged that upper daily expected move. The price closed in it with, remember, 68% of the time it closes within there. 95% of the time it closes within the 2 sigma move. And then the orange lines are the updated weekly expected moves, which will update you on that chart momentarily. If you take a look at the Qs got into the daily expected move, came down a little bit, but it held the August low anchored VWAP. As you can see, it held, boom, and we started moving up. We closed outside of that, not too far off of the upper weekly expected move, and we're back above a declining 5-day moving average. So this is still declining. We're below the month-to-date anchored VWAP and the quarter-to-date anchored VWAP right now. Now let's go ahead and update you on the current daily expected moves going into tomorrow's trading session. So this line right here, if you can't really see it too well, I have the charts more clear on my Twitter, so you can hit the link in the description, go to my Twitter account, and get them there. They should be posted by the time you're watching this. And then also down here, okay, so we have 442.36 to the upside, 436.32 to the downside, and then we have the 2 sigma levels, which I'm not going to discuss, and then we have the weekly expected move. So this is what the market's pricing as far as risk for the week, and that's up there at 444.50, and down there is at 428.50 for the SPY. Now the 5-day moving average is still declining. As you can see, we tested it. So if we get above and we come tag this 442, just be aware that the moving average is still declining at this time. We still need to see it start to flatten out. Once it flattens out, then we need to start to see it turn up to feel a little bit more confident that we might have some more steam in this rally. And then be aware, we're still below that quarter-to-date anchored VWAP. So if price does continue to bounce and we hold the August low anchored VWAP, which is, you can see, we came up, right? We came here to test it. We got back above it. If you read my tweet from just the other night where I couldn't have a weekend recap, but I quickly discussed that. Okay, let's continue on. If you take a look at the Qs on the 15-minute time frame, I didn't update this daily expected move. My bad. I'll go ahead and post that updated chart in Twitter, so we're going to go ahead and skip that. Okay, we're going to look at the monthly expected move. So as it stands right now, the EMA, we tagged it, right? The monthly EMA was at 4,362, and we got a little bit below it, but we started to bounce slightly from it. We're still under the lower monthly expected move. So, as we've stated, right, 68% of the time, price closes within it, and then we have the dash lines right here and up here. Those are actually the quarter to date, so we're trading pretty much, I think, just slightly down there on the quarter, very slightly, right? The quarter started basically close here, and then we started here, and we have one more month left in the quarter. So overall, the quarter's unchanged as it stands, but we're slightly below that monthly lower expected move, okay? So to see it move up a little bit further, is that normal? I think that that's more than normal to close within there. That's actually would be the statistic. That'd be the higher probability of that taking place. If you take a look at the Qs did bounce pretty much perfectly from the 5 monthly EMA. That's at 356.17. We were aware of these levels. If it started breaking down, a watch for that. And now they started moving up, back up to the lower monthly expected moves. We're slightly down on the quarter. Not much has changed overall for the quarter. The dash line down here is the lower quarterly. Up here is the upper quarterly and monthly. They're in confluence. So to come back up to, 367, 368, right around there, maybe even 370, back within the monthly expected move, right? We still have, 10 days left in this month. Not a complete 10 trading days, but 10 days left in this month. To close within there would be the higher statistic probability of taking place. So it doesn't mean it has to, but that's the higher probability. If we take a look at the IWM, this one is a little bit more concerning. This one is below the monthly 5 EMA, and it's starting to slightly decline here. And it is below the monthly, and it's in the red shaded area, which is 20% drawdown from the all-time high. So technically, the IWM is in bear market territory. And when I really think of this, I think it's the higher rates, right? Higher rates, it's more expensive to service debt. When it's more expensive to service debt, what companies really get hurt with that? Well, the ones with that need the debt, right? And right now, small caps are the ones that have just not really gone anywhere for a long period of time. If you just go back from right here where we are and you just go all the way back. I mean, we were here, we tagged there. They're at the beginning of 2022 as the low point there in 2020, the start of 2022, I should say. So we haven't really moved anywhere. If I take a look at the 5, 10, 20 EMAs, that was not a 20, that was a 12. That's a 2, and that's a 0. Here we go. Come on now. You can see that the 5 is below the 10, which is below the 20, so the trend is clearly bearish. You want to see it cross above, and then we could start to see a nice river of moving averages flowing to the upside. So as it stands right now, even if we were to bounce all the way back up to the 20 period on the NASDAQ composite, it could be very similar to what we saw here, but in reverse, right? We got way extended to the upside. Okay, you can see the 20 is above the 10, or sorry, the 5 is above the 10, which is above the 20. We got extended, and then we pulled back into the 20 period moving average before moving higher. Well, as it stands right now, we moved down, okay? We got really extended from the 5, 10, and 20, and now we're starting to see a movement back to the mean over here. So if it comes all the way up here, I mean, the exact same thing might happen, but potentially in reverse. But we have to see what and how the data looks when and if it gets up into that area. If you take a look at the SPX, a very same situation, right? We get outside of these moving averages, we revert back to the mean, then we start moving forward, and it's just how trends work, right? You see, higher highs and higher lows, and same with bearish trends, you can see higher highs and higher lows, lower highs and lower lows. So as it stands right now, we're coming back into the 5 period EMA, which we have already discussed. If we start getting above that, we have the 10 and then still the 20, and we need these to start getting back like so and start spreading out like they were here to see the trend normalize to be into more of a markup phase. And we're just simply not there yet. If we take a look at the 10-year yield, this is where it gets a little concerning. I'm blown away by how fast this move is taking place. I mean, we're at a 15-year high, basically. I don't have the chart in front of me that shows me how far it goes back, but I remember pulling it up prior, and it was like going back to 2008. Now it's probably even more like 2007, potentially even more than that. I'll have to pull that one up, but yeah, I mean, this thing just blew up like a rocket ship to the upside, so it's getting more expensive, right? So debt is more expensive. You can even see this in like the 30-year mortgage rate continuing to climb. I'm so excited because I'm locking in a rate right now, right? And it just, I honestly feel like I'm about to tag a top, but who knows? Maybe rates are here for longer, and maybe we even go higher than this, which is not going to be good. It's typically not good for growth names, right? And now, if we take a look at the TLT has been really, honestly, it seems like more of a crash mode, which is very concerning. So is stocks going to follow suit here in the near future, or is this a quick flush out? People are going to cover, and then we're going to see this monster rip with some sort of an event or some sort of catalyst to cause that. Well, from a purely technical basis, we're down here at around 92.50, and we're not too far off the October low. So really, since the low is in, bonds haven't gone nowhere, right? They came up, we went through this, we broke down through this channel we were watching, it back tested it, it's below all those moving averages again, and we're kind of getting extended to the downside. So we have a low, a higher low here, and a positive divergence forming. Now, a key level that if I look at like a bigger time frame chart on this, so the monthly time frame, I want to pay attention to this potentially for a more longer term hold, and the levels that, and the reason why for first and foremost is so one, how high can rates stay this high? You know, it's undetermined, but from what the Fed said, all right, they don't control the 10 above, but technically when they said as far as where they're holding the federal funds rate, they said they can hold it there for till 2025. Now, I don't know if that's going to change, but they did mention that on the last press conference. So how high and how long can these rates stay for? Well, if we start getting more momentum to the downside, or we start breaking down further on TLT, I want to just point out the yield right now is at 3.36%. And if it can come down to around this 80 range, which would be pretty insane because that's a big fall in a very short period of time, but we had prior support, right? And once support breaks, it can become potential resistance. Well, it broke here, and then you could see right over here, it acted as a level of support. So if price were to come all the way down into this area and you're looking for a very longer term trade where you can get the yield and potentially even a return on that equity by the price going up, that could be a potential opportunity and a level to watch if it can even get down there and break this 90 level. But I mean, for long-term investors, maybe you're trying to buy in right now a little bit, maybe you're buying a little here, maybe buy here, maybe it even drips further. But even if it does and it starts taking back up at some point, it could be a much beneficial longer-term type hold. So it's something to obviously keep in mind. If you take a look at the dollar's still been on a pretty big tear. But the last 2 days, we just kind of consolidated the recent run-up. It hasn't been falling all too hard, right? But these last 2 days that the dollar was down, look what was up. The S&P 500. So is the dollar just pausing right here before a further move to the upside as a flight to safety, which is going to eventually push the S&P 500 down further? We got to be aware of that. That is potentially a possibility. If it comes down further, maybe look out for a back test of this and see if it has strength afterwards. Because if that is the case, then we might see the stronger bounce. But then if it starts picking back up to head out higher, it might look something like that. Now, when the dollar goes down, it's typically decent for gold. And gold's been holding up, honestly, relatively well on the strong dollar move, as well as in rates. So with rates moving up higher, it's pretty impressive to see how gold's been holding up with this. Now, I will call out gold is coiling up here. So we have a low match with a low, and then you can just see it's getting very tight in this area. So if the dollar were to potentially break down a little bit further, or even yields were to come off or rates were to come down, this could create some sort of a pop in gold in the very near future. If you take a look here, silver saw a nice rally today, up 2.67%. The miners didn't really follow suit all too well. So remember, the miners follow silver almost to a T. You can just see what as I overlay this stuff. So as silver's been going up, maybe this is telling us, hey, keep a close eye on miners, because maybe we might see the GDX back trading around 22 here in the very, yes, right around 22 in the very near future. I think that's, no, I'm sorry. I don't have the price. It's at 27 where it's at right now. So that, yeah, that's the price of silver actually. So I'll have to pull up the price of GDX, but I would say that it could potentially pull back up to its prior area of support. And then once support is broken, it can become a level of resistance. So if it were to come do something like that, it'd be something to watch. Okay, another thing to call out is the reason why I'm talking about miners is the bullish percent index has cracked that 25 level, and the RSI is getting into that oversold condition. It does not get there very often. This is the first time in 2023 it's been here. In 2022, we did get cracked lower into this range, in the 10% range, and there was a positive divergence. Prior to that, we had a negative divergence there in April, which marked a pretty significant top there in miners coming down to the October low. Okay, prior to that low, we had in October of 2021, and you can see it went up pretty substantially right there as well. So as it's coming into these levels, if you're looking for potential miners as a play, I mean, this could be a good area to start looking for various miners, or if you want to get into an ETF to hold for a longer term, and then just obviously have stops in place to mitigate risk. A couple other charts that I want to share with you is the summation index still pointing straight down. We talked about it getting very oversold in the Nasdaq McClellan oscillator, and to see a bounce from these levels is more than normal. Okay, but the trend still remains down, so we want to see a potential change in trend when the parabolic SAR underticks from it. Okay, and it's just not there yet. If we take a look at the NYSE summation index, the same story goes. Very oversold conditions over here, where it got to almost a minus 300 reading, and it's still down there at about minus 200. So, you know, pretty beat up reading here, and this is pointing straight down. So yeah, if we get a bounce, you know, proceed with caution. And we've already discussed that, given the fact that the SPY on the 15-minute time frame, right, the market is still in an overall downtrend, and to feel more confident, you want to see it flatten out. Okay, that's the accumulation phase, and then go into a markup phase where we start moving into higher highs and higher lows. Okay, I really want to quickly touch on this. We had some changes to the Patreon group, so if you want to join this, I'll quickly run through it, but I'll show you what we added in there, what I added in there for users, just to bring more benefits. But this thing is only $9 a month. I don't charge a lot at all, and I give out an incredible amount of data. You can pay annually and save an additional 16%, so it ends up being $90 for an entire year. So yeah, if you want to do it by the month, I don't offer refunds because it's just how much I put into this. $9 is, you know, a cup of coffee at Starbucks and a sandwich, you know, one time, and then you get this for the entire month. But what we do here is it's not an alert service by any means. I give some trade ideas, just various charts, you know, with potential stops, potential areas to look for as far as breakout goes. And then I give my watch list. I've made some changes to this where I kind of give you like small snippets of the pictures of the stocks. Then I give monthly, quarterly expected moves, weekly expected moves for a bunch of products, daily expected moves for the products that have the 0 DTE options, mainly just a few index products. I have the zones in there too as well, which are based off of an indicator designed by Joe Catanzara. These bands that I extract the data to give us a more fractal look at the overall markets, and it's just a helpful tool to gain insight as to what might be oversold and overbought. And then I have, if you like some of my stock market indicators that I share here, I also give you permalinks to the stock charts charts that I use in these videos. Then you have access to the community. Okay, so that's what I have there, but I just added in this last weekend, which was my birthday. I added it in just the day before my birthday. I have now tradie ticks integrated into my Discord, and it is pretty rad. I'm still learning a lot, but we included the query bots, and what this basically means is at any time you can hop into that channel and you can type in, you know, TR top flow, big flow, flow summary, open interest. You can get GEX data, gamma exposure levels, 0 DTE data, and it'll show a chart and pop up automatically after you type in these symbols. So there'll be more information on this. I'm still learning the ropes around most of this stuff, but I just turned it on just to have everyone experiment with it. So this is live, and then I have auto posting bots from tradie ticks as well, and I'm probably going to remove some of these, the ones that I don't find to be too helpful. But from what I've seen so far, I mean, these bots are pretty cool. So the scalp bot, I'll show you some stuff that took place today. It was only one trading day, but this thing was pretty rad. So it gave 8 trade ideas, 7 of them were in the money, which is pretty wild. It uses the Strat, which is a strategy for trading stocks. I'm aware of this strategy, and I like this strategy, but they just made it automatic, so this gives you entries, exits, stops through this auto posting bot. But like, I'll give you a couple examples. Like CRM today, it said to short right around here, and then a target was right here, so this little trade played out perfectly. ENPH was another short at more of the beginning of the day. It said trade here and then take profits here. The stop was way up here. NOW, it said enter here, and then the target was right here with a stop right down here, so that was in the money. Snow was one that basically just tagged the stop before going on a ramper to the target. So it was an entry here. It stopped out here. So that was the 1 of 7 or 1 of 8 that actually stopped out. And you can just see how close that was there. And then that's all I actually added here. There's a couple other charts, but it is pretty impressive. Just be aware that this is not like, you know, the holy grail. It's just kind of a helpful tool. Maybe give you some trade ideas intraday. You can see that some levels, like, it'll give you, this is the reward, this is the risk, but there are some that, like, okay, the reward is this and the risk is way up here. So it's all about positioning, sizing, and being aware of like macro events that come out during the calendar, right? If you get some of this stuff, you know, you get a trade idea, but yet you know that Federal Reserve Chair Powell is going to be talking in 5 minutes or whatever. You might not want to be taking those positions given the fact that volatility, you know, is about to blow up. That's all I got for you on today's episode, everybody. Hope it helped out. See you later.